Welcome to the Trading Edge. Today I am going to share you the ultimate secrets to become a consistently profitable trader. So first of all, welcome to everybody. If you are struggling from few years, still couldn't get a breakout in your trading, you still stuck in break-even or losing stage, this video is for you guys. I'm very confident that this video will give immense value to your trading. I hope that this video is gonna change your trading completely. I'm pretty sure. Please do watch the video till the end. Don't skip the video. It is very important. So let's discuss. Let's go. So what is required to become a consistently profitable trader and to get funded? So guys, a mechanical trading system is what all you need first. In the first place, I know many of you guys are trading discretionary. You are trading like a discretionary way. So you don't know what is a mechanical trading system because it is what actually you need to become successful. That is the most key, I mean, ingredient for you to become succeed in these markets. So I'll show you how to build it. So first of all, most of the beginners and these novice traders trade discretionary. What happens is when you trade discretionary, you can't really get an edge in the market because you always act randomly. So you can't really have any edge because of the randomness. Your results also will be so random, but there won't be any positive expectancy for your trades. But if you have a mechanical trading system, a rule-based trading system which is back-tested with large enough sample size, uh, it's already proven in the market that the system has positive expectancy and it has produced some decent returns in the market, then you can use that system to produce, I mean, to make money. But when you are trading discretionary, you don't know what you're doing. You just hope that that what you're doing will work in the long term. That hope doesn't work in the market. So you have to have a mechanical trading system with solid rules. So, and once you have that system, you have to backtest it. You should get the data like what is the average percentage of return it is generated over the months, and what is the maximum drawdown, and what is the profit factor, and how many red months in consecutively it has generated. This kind of all this kind of data you will get, so that once you have the data, then you can actually execute the system, and you can stick to that system even during the rough times. Like every system generates losing streaks, winning streaks, so they are inevitable. We can't change them. I mean, we can't avoid them. So a mechanical trading system is must, guys. What we're doing is a discretionary trading. Actually, I strongly feel discretionary trading is it doesn't work. I don't know. Many of the experienced traders do maybe discretionarily, but even the discretionary trading itself is like for the experienced traders, it is like a rule-based system in the back of the mind. So I'll tell you what a discretionary trading system looks like. Let us suppose, uh, yeah, let us suppose this is the resistance, right? Um, let's say the candle, sorry, this is the resistance. Let us say the candle closed like this above the resistance after a huge consolidation. Here, generally, when the breakout comes, it's a buy signal. Like for everybody, it's a buy signal. I mean, I'm not saying everybody trades this way, but let's say this is the buy signal. So this signal can be traded in many different ways. Let me tell you how. In the first instance, let's say in the first instance, once the candle is closed, the person can buy here and keep stop loss somewhere below the previous, I mean, below the low. So this is one way, and the I mean second way is the same person can wait for bottom to form, and then he may consider buying at the break of the high after the formation of bottom. This is another way. Like the third way can be Once the candle close above the resistance after consolidation, he may consider buying once the candle fights a few minutes. Like if it is a 30 minutes time frame, let us suppose, he may consider buying if the candle breaks the high after some 5 6 minutes, not in the first couple of minutes, maybe after in the 5 6 minutes, he may consider buying here. So the same system can be traded in three different ways. So this is why most of the people doesn't succeed. You know, these beginners don't have any solid rule to buy. They just sometimes some I mean, for example, if they buy here, if they keep stop loss here, it may hit stop loss. It may, I mean, the price may come back and hit stop loss. Then it may turn, and then it may give a run up. Then they feel, oh my God, I should have waited for the candle to make this kind of bottom wick. Then I should have bought. So these kind of rules they keep on changing, and then when they are actually doing this, they and in that instance, market may not give a break. I mean, may not provide a bottom wick. Market may just run up like this quickly. Then they think that okay, I think the I mean previous method, I should have stick to the previous method. So these kind of, because of these emotions, they think they keep changing the methods how they buy, sell, and how they manage risk. So these kind of behavior leads to the random results which don't have any edge in the market, because market itself are irrational. So you're actually doing another random things in the random markets. So how can you expect to become a consistently profitable? You need to have a solid rule-based system to succeed. Because if you see all these hedge funds, investment banks, all these run algos. You know what is an algo? Basically a set of rules. They don't take any I mean decisions emotionally. All they have to do is just to monitor the algos, and they just monitor and like nothing else. They don't do anything else. They just monitor, and maybe any changes are required. Then they make small minor changes. That's it. But what we retail traders do, I mean most of the retail traders do, what they do is they just don't have any kind of algorithm kind of thing. At least they don't even have any rules. Actually, rules is nothing but an algorithm. So you need to act like an algorithm. So this is what I want to tell you. All you need is a mechanical trading system which is back tested with enough sample size, which is back tested for at least 3 4 5 years. The bigger the sample size that you have back tested, the better the system will be, because the odds or the probabilities, I mean, the data will tell you the data will be the real data. I mean, it has more significant. What do you say? Like it is much better, because when you know the system has generated good returns in the past, in the long past, then you will be very confident that the system will keep on working in the future as well. So trust me, guys, the systems will keep on working. They won't, I mean, mislead you. The problem generally lies in the trader, because during the losing stakes, rough times, generally traders couldn't stick to their system. They just keep hopping onto the strategy. If that it doesn't perform well, they keep hop onto the another strategy. What they actually don't know is every strategy has rough times. Every strategy produces drawdowns. It's all about the trader. They have to stick to one thing. They have to keep repeat. They should. I mean, they should be in like a simulation. The life should be like a simulation. They just wake up, follow the rules of a system, and sleep, then repeat. That's it. But they don't do anything like that. They don't do anything like every day is they consider like in some different day and different setups. No, once you have a system, every day is like the same day. There won't be any change. And so let's go. So how to create a mechanical trading system? I already so let me explain how you should create one mechanical trading system for yourself. And this is not actually the system. I'll take an example. Let us suppose the market is going like this in waves. We all know in the uptrend, the market makes higher highs and higher lows. Let's suppose you may consider you want to only trade the reversals, right? You want to trade the trend reversals. So you may consider buying, selling once this low is broken. So once this low is broken, you may consider buying, selling. You may consider keeping stop loss somewhere here. But you may target 1:1, let's say 1:1. You may target like this. So the rule one is it has to break the most recent low, right? Most recent low. Rule two is, let's suppose, your entry should be below the 50 exponential moving average, below 50 EMA. I'm just taking this as an example. This is not the system. How you can create rules. And third one is, yeah, let's suppose these two are the rules. This is one system. Once this flow is broken, and if the price is stays below the 50 EMA and 50 EMA also broken, then you can keep stop loss at this high, and you can enter here. You can keep TP here for 1:1, a fixed risk reward. Rule 3 is target fixed risk reward. See, this is the system. So what we have to do, now you have a system. Let's suppose now you have a system that you have to backtest this system with huge data. And see, 1 year data, 6 months data is not enough, guys, because you don't really get the true nature of the system, because sometimes the markets can give, during the trending markets, some systems work so better, but during the sideways markets or bearish markets, they will produce huge drawdowns as well. So if you only test during the trending markets, what happens? You may think that you may get misguided by the system, that it works like a magic, but that doesn't happen. So what we have to do is we have to backtest it with huge sample size and just go back 3-4 years. You have to get the data, and during the data you will get statistics like how many months in consecutively it produces negative results, right? What is the max drawdown, max DD? So what is the average return? What is the average return? What is the profit factor? So we can say, what is the win rate? What is the average risk to reward ratio? These are all the important statistics. So once you get the backtested data, you will get these statistics. So we can rely on these statistics. So you can confirm if all these statistics looks good, then you can confirm this system has an immense edge in the market. So once you confirm that system has an edge in the market, then by keeping all this data in your mind, you can start executing the system in the live. You won't get panic when the system goes through rough patch. When it is producing losing states, you have this data. It may produce some 6 losses in a row historically. So even though it produces 5 losses in a row, you won't panic, because the system will produce 6 losses in a row at any time. So these kind of statistics will keep you in track even during the toughest times. So we have to have a developed, mechanical system with simple mechanical. It should be very simple. Maybe hardly 4, 5, 6 rules, not 10, 15 rules. To buy just 5 or 6 rules like that. If you have a system, you can easily make money, guys. Trust me, you can make money. This is what you are lacking all these years. This is where this is what the secret that you don't know all these years. Let me tell you, all the most successful platform traders, these hedge funds, investment banks, everybody have a mechanical trading systems. Let me tell you, they don't trade just because they are posting some random trades, random means in the social media. You may think that they're catching those moves intuitively. No, they are not taking, they are not predicting the markets. They are just following the systems. That's why they are so successful. You are completely being misguided. Sorry, you are just misguided all these years and all these days. Just stay away from the social media. All you have to do is have a mechanical trading system, backtest it, have an edge in the market. Just keep repeating, keep executing the system, no matter what happens in the short term. So let's go. You should create a crystal clear rules which tells you where to enter, where to exit, and how to manage risk. And once you believe that it works, like how I discussed before. Once you have the structure break and TMA break, then you can consider buy selling. So that's how once you believe that we have to back test it. Then back test it with the large samples. If the system doesn't work in the back testing, then you can leave that system and you can just try something else. And then we have to back testing is the must. And it is the most hardest thing in trading. Let me tell you. Backtesting is the most hardest thing because we have to work hard, we have to get data, we have to keep on backtesting. Literally, I have backtested. Still, I do backtesting, and you know, I have backtest. I used to backtest the whole day. The past, I used to back because I like it. And the next is get the data and understand it. You have to get the data. If the system has an edge and created returns in the past, then practice in live market. Yes. So no matter what happens in the short term, just stick to the system. No matter what happens in the short term, you just have to stick to the system. Losing streaks and losing trades, you just can't avoid them. Every system in this world produces losing streaks. If you think that you have to have 70% win rate, 80% win rate, just leave trading. Trading is not for you. You don't have to have that kind of win rate. In fact, people talk just win rate alone or just risk reward alone. Those are the most like funniest people because win rate and risk reward go hand in hand. Win rate, if the win rate is more, the risk reward will be less. If the win rate is less, the risk reward will be more. Like win rate and risk reward are inversely proportional to each other. See, someone else may say in the social media that I have 70% in it. Then you should have to ask them, do you have 1:10 risk reward? No, they maybe have 1:1, even less. See, I believe even 1:1 systems have less than 70% win rate. If anybody have more than 70% win rate, that's good. You know, less than some, and you need to have just with 1:1 risk reward, we just have to have a 60% win rate system. That's it, guys. If you have 60% in then you can easily make returns, positive returns. So that's how you should trade. Not quantity, quality is what matters actually. So many of the beginners think that we have to take so many trades like 20, 30 trades in a month. At least we should take 2 to 3 trades or minimum 2 trades. These kind of these bullshit beliefs many people have. No, and according to the PropFirms data, maybe the highly profitable traders from the PropFirms, I think the past that my forex funds used to be there, they released the data. The best traders in their company used to trade like hardly 3, 4 trades per month. If you see that's how the quality is what matters. You, even in those 3, 4 trades, they don't win every trade. Maybe they win only 50%, or even they just win one trade and they may lose the other 3 trades. It is not about the win rate and what I mean. It is not about the win percentage. It is about the how less trades you take. We have to take as less trades as possible, and yet we have to deliver good rate. I mean, not we have to. We will deliver good returns. If you keep trading like 2 trades, sorry, if you keep taking 2 trades, 3 trades per day, then by the end of the month it will be 40 to 60 trades, right? So if you take these many trades, obviously you will fail. Definitely you will fail. You are actually over trading. You should not do that. Quality is what matters. Just a minute, guys. All right. Okay. So let's go. Isn't sure. Yes. Making 2 to 3% per month is literally amazing when it comes to performance. So yeah, this is what I have been discussing. Um, you should only target 2 to 3% return per month. You don't even have to make 8%, 10% kind of returns. It's all about the again, once again, I want to tell you one thing here. Return and maximum drawdown go hand in hand. If you want to make huge returns, obviously your maximum drawdown will be less. As a trader, your responsibility is to keep your maximum drawdown as less as possible. Always remember, I will show you my results, my live results, how it looks like. And you can literally guys with 2 to 3% how you can achieve, how you can crack the problems. I will show you. Just stay tuned. Do watch the video till the end. It is going to be a lengthy video, but this video can become the most important video of your whole life because I'm just gonna tell you what actually the way to become succeed in the markets that nobody is not even telling these secrets because have you see only few people are telling you need to have a mechanical trading system but everybody is just posting their wins. They're not posting when they lose. Everybody in the social media just portray themselves as they're the best traders in the world. That's very unfortunate. Amount of return is always directly proportional to the match drawdown. Yes, I have already told you. You are completely misguided. Because in social media you may think that everybody is making thousands of dollars of payouts. They're not actually making thousands of dollars of payouts. They are losing in the back end. If they take 10 accounts, top firm accounts, they may lose 8 accounts. They may make a profit in 2 accounts, and that profit only they will show you. No. So money makes money. In markets, you need to have money to buy prop challenges. Then you have to take risk in those challenges. You just can't take 0.5%, 1% risk. You have to take 2%, 2.5%. Right? I'm not saying this is the only way. If you don't have enough money, whatever the money you have, you can stay disciplined and you can just pass the challenge with 1% by taking 1% risk also. But it may take some little bit time, but you can pass. So you have to choose one of the ways how you want to go. If you have money, let's suppose if you have $1,000, let's say 100K account is $500. You may consider buying only 100K account and keep $500 as cash. So you want to go with 2% risk. So with your system performance, you may consider, let's suppose you completed phase one, phase two in 1 month. So, or you may blow this account as well. But all you have to do is you just you will be confident that you won't feel so sad because this is not the only $500 you have. You already have another $500 in the back end. So this is how you can't just take 200K account with $2,000, right? So you just have to manage your money and. So I will show you how the mechanical trading system looks like and how the data, how you need to journal and how you need to log your trades. So let me show this. See, you can see here, this is one of my systems. See how I'm journaling my data. See, I have taken 42 trades in the last 2 months. Let's say 41 trades. I think 41 is let me see. In October, I have taken 3, 4, 5 trades already. So just -5. So I have in 2 months, in the span of 2 months, I have taken 37 trades. So here, these are the number of trades that my system generates, and in which time frame I trade. In 4 hours time frame I trade. Right, in 4 hours time frame, I trade all the 28 pairs, 8 FX pairs I trade. But I don't sit in front of the system all the day. Maybe in a day I only look at the charts, then the 4 hour candle is closed. That's the only time that I look at the charts. And during 14:30 also, I look at the chart. And during 18:30 also, I look at the chart. So how simple it is. I don't have to look at the screen all the day, like how scalpers doing. It's like my work-life balance is also so good. So yet I make so many trades as well. I mean, I'm getting a decent. I'm collecting decent. I mean, decent sample size. So we need to create a system like this. And here I'm making 18, 19 trades. In the future, I'm planning it to reduce to even 10 trades per month. That's more than enough. So this is how, this is what I'm telling. Even 5 to 6 trades per month is super good. I strongly recommend to take less than 10 trades per month. So whatever it may be, whatever the trades that your system generates, you just take them flawlessly. You just don't have to skip any trade, right? Your edge will play out because you already backtested the system. Let's suppose we have already backtested the system with huge sample size. So you can see the data of my system. I have taken 42 trades, 19 were wins, 17 were losses, 16 were break evens. So I have generated a good return, 14.84% return in just 2 months. In just 2 months. I'm not saying that I'll average 7% return for the whole year. I don't know. Maybe I can average more than 7% return, or I can average 6% or 5%. I don't know. Even I can average 10, 12% as well. So it's all about the data that is coming. But I know that I will be profitable ultimately because I know the system has an edge. I have back tested. These are the A plus setup that I'm following. It's not about the win rate. See, you can see the win rate is 53%. But here the average risk reward is what matters. We can see here 1.84 literally with 50, I mean 53% win rate. We have 1.84 average risk reward is crazy. Literally crazy. And profit factor, you can see here anything profit factor above 1 is a profitable system. If you can have profit factor 1.5, it's so good. But here the profit factor is 2.17. The max drawdown is also very less, just 4.63. See, actually in PropFirms we have 10% or 8% max DD. Here the system has 4.63 max DD so far. So what I'm saying is, once you start collecting data like this, so this is what you asset. You see nothing. This is the only thing is your asset, the biggest asset you will be having because you are collecting the true data of your system. See here, you can see the graph. See how beautifully the graph looks like. See, the graph, initially the graph started like this and it has given huge impulse. Then the graph is in consolidation for 1 month. Maybe soon the graph will give breakout and may keep continue going up. So I'll be making hell a lot of money in this month. I have made some money in this month. So here I'm just managing this. I'm not doing anything. I'm not thinking. I just wake up. I follow my system rules. If I get any trade, whether it is a loss or win or losing streak or wins, I don't care. No emotions, literally zero emotions. I know I have to. I'm here for the long game, for the long term. I'm going to execute this system for the rest of my life. This is my biggest asset. So this is how you need to trade. Actually, once you backtest it, the whole work has to be done in the backends during backtesting and system creation. But what you're doing is you just come and randomly do these closures or randomly do these kind of some different. Some people do these kind of supply and demand things. Yes, these are all correct. But what you have to do is you have to create a solid rules. You have to have a solid, strong foundation. I mean, a clarity, an algorithm like kind of rules. Because what happens during when you are trading supply and demand is sometimes you take zone like this. Sometimes you take zone like this. Sometimes you take zone like this. Mix. So what are you doing here? Here there is clear inconsistency. So we are clearly succumb to that. You are clearly acting. You are clearly very inconsistent. You are just not following any rule. I mean, How can you draw out the edge from the market? How can you become consistently profitable with that kind of inconsistencies? You need to have a solid system. That's why, see, by this time in this video, I have used that system word so many times. And I know you may feel bored, but guys, trust me, that is the only thing that you need. Once you have that system, you don't even need a trading psychology, guys. Once you know the system, the data, so what is greed and what is fear? You don't have to care about them. You won't get any greed or fear. All things will be there in your data, right? So this is one of the systems. I will show you the another system that I'm using. These are intraday systems. I mean day trading systems. These are not swing trading systems. That's why I'm taking the 18 trades or something like that. So the other system is this system. Here in this system, it has 61% win rate. Right. In this has 61% win rate. And but it has average risk reward is 1.53. The previous system has average risk reward is 1.84. So you can see that the win rate is more, the risk reward has dropped. The profit factor is same, like nearly same. That one has 2.17, this one has 2.24. This has less maximum drawdown, 3.76. Of course, this system, this is 4 months data. That system has produced 37 trades in just 2 months. This system has produced 1, 2, 3, 4. In 4 months only, the system has produced 42 trades. So you can even see in this system in July month, I have got 11 winning streak, literally 11 win streak. And even in September month, I have complete. I mean, I have closed the month in red. So you have to, you should know. See, in trading, you don't have to finish the month in green every month. You won't even. I mean, you may with just with your system, but you don't have to. Still, you can make hell a lot of money. So what you have to do is this build a system. That's it. And I will show you the graph. You will see how beautiful the graph looks like. And you can see here, this is the impulse. And for few trades that I stuck in consolidation during June, maybe June or July, and it has given 11 winning streak, which is crazy. Now it is going through consolidation periods. Trust me, maybe this kind of winning streak is coming soon. Maybe it will give a breakout. I'm going to catch it, no doubt in that, because I stick with the system's rules, no matter what. For the next 5 years, 10 years, the system rules doesn't matter how much drawdown. I know that the system has less than 10% drawdown, which is crazy high and which is crazy low. So I'm going to make a lot of money with these systems. So all I have to do is just consistent. So here and why I'm showing is I'm not showing just because I'm making money with these systems. Nothing like that. I want to tell you how important it is to make develop a system. So you have to make system one for yourself. Got it? So you can even see the number of trades here. See, all these are the trades pairs. This is whether I bought or sold. This is the date, and these are the trades. See, you can see here, these are all the losses. See how small the losses is. This is just minus 0.57 R. These are R's. Means if you take 1% risk, these becomes percentages. If you take 2% risk, you have to multiply them, because 1:1 means you are losing 1 hour to make 1 hour. So that is what you have to measure your system performance in hours. Percentage of returns depends on how much risk we take per trade. It depends on trader, but system performance is doesn't. I mean, system performance is what matters. You can see here. See how beautifully the system has. This is the June month. So one trade zero means break even day. One trade zero. So here on this day, like this is how you have to what I say, manage your trading journal. Like, this is the trading log actually. This is not the journal, and so I will show you one of the best traders in the business, like in the prop firm. See, this is one of the best traders called Euro Trader in the Twitter. You can see him in Twitter. So this is his statistics. See, he barely, I mean, he barely have 60% win rate. In June month only, he has 83% win rate, but he's still making just 2.7 or 2.2 or 3 or, and he lost 3.1 R in January. So overall, in 10 months, he has made just a 10.55 R. See how less return he is making. It's just on an average, with just 1.5 hour per month, he's literally killing, because he trusts in his system. He every day updates his trade log. So see, you can see most of the trades are losses. Even you can see here, see, this is a screenshot of what trades that he's taking. He only trade Euro USD. That's why his name is Euro Trader. So here you can see here, all these are losses. And this is his graph. See how many pullbacks are there in this graph. This is the equity curve. So this is what many people don't know. They don't even have any trading system. They just blindly buy and sell. How can they expect to become a consistently profitable trader? So yeah, it takes time. It takes efforts to build one system. But what you have to make your hands dirty. There is no easy success or easy money. It's hard. It took for me it took three or 4 months. No, it took 3 or 4 years, and then to test and do everything, it took 3 or 4 months. So it's all about the experience and data. I mean, these efforts, back testing, all it takes, all these kind of efforts you have to put in to develop a successful, I mean, good edge in the market. So if you, I know many of you guys are like doing full-time jobs, and some of you guys are maybe students. So if you don't have that much time, you may consider using my system. So I will give it to you. Of course, it is not for free, but you may consider taking my system. You can, I mean, you can join in the Telegram group that I'll give the link in the description. You can join the group and you can consult me. But I strongly recommend to create one system for you guys. See, if you can, if you truly can develop a system for you, you just go ahead and develop one for yourself. See, the only those who cannot really develop the system, who don't know what to do, who don't know where the edge lies, only those people can consult me. Otherwise, you just have to develop your own system that is much, much better. So whatever it may be, um, and have a good system, but make sure that whatever you feel, that don't think whatever you feel will have an edge in the market. No, you have to test yourself. You have to back test. You have to confirm. You need to know how much return it is producing. It is generating on an average per month, on a year, per annum. So these kind of statistics you should have. No? So this is the video, guys. So I hope you all understand and you will make a change. I can't wait to. I mean, I'm truly rooting for your success. Definitely, if whoever implements all the principles or all the suggestions I gave you in this video, whoever takes seriously, trust me, guys, you're gonna become so successful in trading. Trust me. See, I'm looking myself in the next 1 year where I will be. Not even next 1 year, next 2 3 years. If I consistently execute this system, irrespective of the small red months. See, those red months are just like passing shower. See, those doesn't impact, say, -2% per month. Say, how does it even, we don't even have to care about it, right? So this is my first YouTube video. Sorry, maybe I'm not able to speak well, but yeah, this is what I want to share with you from a long time. So what you all guys, I do see in online, I mean, in social media, that you all guys just do trades in random. You guys don't know. You guys actually, you may feel like you are doing right because you are actually doing wrong, but you may feel like you are doing right. Uh, so listen to me, please. Thank you so much. And okay, yeah. If you like the video, please do consider. If you truly like the video, subscribe to the channel and like the video, and just turn on the bell notification. And I keep uploading some amazing videos in the future as well. So thank you so much.